Bad news, your monthly payment is going up, and it's got nothing to do with interest rates. This is the weekly report on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm the host of Major Money Matters. I'm also a mortgage broker powered by Edge Home Finance. And this is the weekly report where we talk about what's going on economically and how it's affecting you if you're a buyer or a seller in this market. Okay, as normal, we start with the charts. And let's bring up the charts here. Now, you're going to see that third bar from the right there is what happened on Wednesday. Wednesday, CPI numbers came out and pretty much met expectation. Now, keep in mind on this chart, we want to see this trend up, which means that interest rates are going down. And on Wednesday, we got a really nice green line there, which means that mortgage-backed securities were being bought. That line is trending up. However, Thursday and Friday, not really great days. Thursday and Friday, some bad economic news came out. Won't get into that here, but we started to give back most of our gains from mortgage-backed securities that we got on Wednesday. So what's the end result? End result is we're pretty much where we were last week. Now, we're expecting a big shift on May 10th. I'm going to talk about that a little bit later on. But, right now, we're pretty much in the mid-sixes still on conforming conventional loans. VA loans, a little bit lower, okay, slightly lower depending on your credit score and down payment situation. But in general, we're pretty much where we were last week, about 1/10 of a point less than on conforming conventional, but pretty much same result. As I said, the CPI report came out. Now, the CPI report that we get in May is for the month of April. And we saw some things start to trend down, and we'll go through a couple of those things. Used car prices. Remember, if you've been following this channel, we said that used car prices were elevated about 6 to 7 months ago. Now we're starting to see used car prices come down. Used car prices are down about 4.4%. New car prices. Remember the days when you could go and trade in your used car because you could get a new car at the same price, okay, because of the parts and supplies for used cars that people couldn't get, so those prices were elevated. That's now subsided, okay? We're also starting to see the prices on many things come down. We're starting to see shelter costs come down, so rents are coming down, hotel rooms are starting to come down, and that's gonna trend well going into the summer months, into the fall. So we do expect interest rates to start to taper off into the summer months. The future is bright. I'm very optimistic about interest rates going forward. Our headline story here, homeowners insurance. There's a lot of people that move into Texas and to Florida. The bad news is the homeowners insurance is starting to see significant increases. And the reason why is, let's take Texas. Texas saw a freeze, saw a storm come through, and the cost of that to homeowners insurance companies is starting to be rolled into the pricing for your homeowners insurance premium. So whether you own a house or you're buying a house, your homeowners insurance is going to start to increase. Now, that's going to be primarily concentrated in those areas that experience those events. Florida experiencing hurricanes and storms and flooding and stuff like that. Primarily, you're going to see it concentrated in those areas, but home insurance companies are usually national. So they're going to price in those increases. Additionally, if you have to make a claim because of inflation, the cost to repair your home is going to be higher. So your homeowners insurance premiums are up, in some cases 40 to 50%. Therefore, if you own a house or if you're buying a house, you're seeing your monthly payment increase. Now, if you're doing a pre-approval, you might see yourself actually get pre-approved for less because that monthly payment is going to be more. So it is going to impact buyers right now. Hopefully we see less storms, things start to taper off. Hopefully we see those things change. But right now, we are pricing in a higher insurance premium, and you should expect to see a higher insurance premium. That's why I recommend that you be working with an insurance brokerage, just so you can get some pricing comparison and figure out what's best for you. It's best to shop around for your homeowner's insurance. What a great time to introduce this bill. The Helper Act is hitting the House and the Senate floor today. So I'm gonna put a link in the comments of this video. I need all of you to contact your congressman, contact your senator for support of the Helper Act. Now, the Helper Act is kind of like a VA loan type loan. It's actually a FHA loan, but it's 100% financing. 100% financing for teachers and educators, first responders, paramedics, EMTs, firefighters. This is an outstanding bill, and this is how you can really show your appreciation to teachers who have put up with your kids all year long. Make a bill, help pass a bill, and show your support for the bill that's actually going to help them get into home ownership. This FHA loan is 100% financing, no PMI. So no PMI on the Helper Act bill. This is going to be amazing, going to help people qualify. Now, the upfront PMI is going to be higher. Currently on an FHA loan is 1.75%, but it is going to be higher, but it's going to lower the monthly payment and allow teachers, educators, first responders to get into a home at 100% financing. So show your appreciation to our first responders, to our teachers by contacting your congressman. I'll put a link in the description, but please reach out and support the Helper Act. This could absolutely help people get into homes, and we're excited to be a part of it and excited to be standing behind this. We end on this note about independent mortgage banks, okay? Fannie Mae and Freddie Mac are now requiring some independent mortgage banks to buy back loans that were sold to Fannie Mae and Freddie Mac. Now, many of you don't know this, but when you close on a home loan, that home loan is kind of packaged into a package and then sent off to sold to Fannie Mae and Freddie Mac, transferred to Fannie Mae and Freddie Mac. That's why you have specific underwriting guidelines and things like that your underwriter might push back on, because that company is responsible for making sure everything fits the guidelines to be packaged and sold to Fannie Mae and Freddie Mac. Problem is, in 2020, 2021, everybody was fighting for those loans and that volume. So some people cut some corners. And now you have a situation where independent mortgage banks are being required to buy back some of those loans. The so what of that is, if I'm required to buy back a loan and I'm an independent mortgage bank, then the problem becomes I have to increase my rates and my costs to my future buyers in order to offset the loss that I'm incurring by buying back that loan and carrying that loan on my books. So if you're an originator, you're gonna actually see the cost of this in your interest rates if you work for an independent mortgage bank. There is no way around it. You're gonna see the impact of this if your company is required to do this. That's why I recommend you go to a brokerage where that cost is not impacted by, you're not feeling that cost, the company is feeling that cost, and you can serve your clients better by not giving them these higher interest rates that your company is actually giving you. So if you're a mortgage broker, reach out to us, talk about, our platform, how things work and everything like that. And if you're a buyer, I recommend that you're looking at companies who can look at multiple different interest rates, or lenders who can look at multiple different interest rates at multiple different lenders and give you the best possible situation. So that's it for the weekly report. See you next time on Major Money Matters.